With a new administration in Washington, there's a lot of talk about what to do with tax planning in particular and how that's going to change. On this episode of Friends Talk Financial Planning, we're going to investigate what you might want to do with the new Trump tax regime. Hi, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan-Mermel. I've got a fee-only financial planning practice in Chicago, Illinois. And if you like us, please subscribe. Okay, John, let's talk about what to do and how we're processing and thinking through the new tax regime.
Yeah, and it's interesting. We say, what's the new tax regime? We don't even know, right? I mean, they haven't had any time to do anything here yet. So one of the things about the whatever the new tax regime is going to be is we don't even know, right? And whether, we talked before we hit record, what news comes in on Facebook or Twitter or all the thing. Just one of the first things is just remember this is all rumor, right? There's nothing that's concrete. Whatever was said during the campaigns, whatever's being said now, and you taught me this, Bridget, is when we'll deal with something, be aware. Oh, they're talking about that this might maybe happen. Okay, good. Let's not be ignorant. But we're
Right.
not going to do anything until there's something concrete. And I'll tell you the one last election, right when Joe Biden took office and the Democrats had control of Congress, there was a lot of conversation about estate tax reform and how that was going to change, and and inheritance taxes and these sorts of things. I mean, and if you remember back to 4 or 5 years ago, Biden campaigned on those things. They were topics of debate before the election. He wins the election. There's more conversation and a lot of consternation and angst about how is this all going to change and what to do. And that's when I remember you saying, "Yeah, let's pay attention to this," but I'll believe it when I see it. And now here we are 4 years later. I haven't heard a single person, whether it's client, friend, news, otherwise, talk about estate tax reform. And it was like one of the hot button items 4.5 years ago. And for me, it's helpful to look back on those things and go, oh, no, there's some legitimate. I mean, I had attorneys who got clients that took some action for things. Not that it was that they maybe shouldn't have done it anyway, but you go, hey, let's see. And you go, oh, yeah, that's right. That was a lot of fluff, a lot of, vibrating of the water, but now the waters are calm with regard to that. So that's
Yeah.
that's one of my big takes. I don't know if that's anything that's different for you these days.
Yeah. There's a bunch of people that make their living speculating on what's going to happen with taxes. And they actually do continuing education at financial planning conferences too. So
Yep.
it's kind of weird to me. Like I'm like, this is how you're making a living by
Yeah.
speculating about what's going to happen with taxes. I've been around long enough to know that we don't know. So, and what really woke me up to this was Roth IRAs. So
Oh,
Roth IRAs were really a major change in tax law. It
yep.
created a whole new category of um, IRA and what you can do. Okay. And this was back in the 90s when they started it. And I, at the time, had just started my tax practice. And so I was following close what they were talking about maybe doing, because I wanted to be able to inform my client. But it seems like the Roth IRA got slipped in the middle of the night and nobody even knew. And then it was like the law of the land, so I hadn't heard nothing about this type of account or Roth IRAs. And I was like, oh, okay, that's interesting. Like there's a whole bunch of stuff that might even not be talked about at all. This
Yeah.
is a new concept that they haven't done. The last time a new concept was qualified business income. And again, totally new concept. And it seemed like, again, that kind of took place in the last couple of weeks because the large businesses were getting a tax break with lowering corporate tax. And so then the small businesses were saying, hey, wait a minute, we want some of that action too. We don't
Right.
want to become a C Corp just to be able to get that, take advantage of these lower tax rates. And so then this was born again. I think it kind of passed in about like 2 weeks.
Right.
So
Right.
it's a whole new concept. And maybe actually, if I was going to speculate about what might happen, some reforms around that particular program, I wouldn't be surprised with because of the, again, put together in 2 weeks, um, speculation that I have, it's kind of, it could be, they could make it a lot simpler.
Yeah.
I think that would be nice,
I'll tell you,
but,
this is why I love these discussions, right? Because I'm focused. I told you what, yeah, 4 years ago. Here's all the stuff that we're talking about that doesn't happen. But
right,
then, right, what, and I completely forgot about this. What about the stuff that they're not talking about that will happen, right? Just
right.
more proof that we just don't know. So maybe one of these, I really appreciate you sharing that. And one of the parts of the conversation is let's listen. Let's not, what to do? Don't get excited until there's something that we need to get excited about, right? Pay attention, but right,
Houses have passed the law and they're signaling that the
right.
president is going to sign, then,
Then, yeah,
then I actually start trying to look it up.
right.
Just so you know, like, and there's recently been a new change in Social Security. It's a minor change, but for most people, but it'll impact some people. We'll do an episode on it later, but it's like I was following it, but just waiting for, okay, is this actually signed?
Right,
I don't
right.
want to hear they're talking about
Yeah.
it.
So
Yeah,
on those project, like, listen, keep your cool. Let's figure out what happens when there's something to talk about. There are some things though that will be changing coming forward, right? And
yeah,
what I'm thinking about is the Tax Cuts and Job Act, so our current tax regime of tax brackets and tax levels is scheduled to expire at the end of this year.
right.
So if Congress does nothing, there's no action taken, the tax law for next year will be different than the tax law for this year. That's written into the code right now. And if Congress does something, then of course it will also be different, or maybe they'll continue, right? Maybe they'll do something and keep it the same. But
Doesn't
there's a
keep going.
decision point at some point, so we know that there's going to be something going on here with regard to taxes during the year. And how are you thinking about that, or what? I'm curious as to what you're
You
maybe
know,
doing or not doing, or what's going on in your world about that.
I think around the edges, things will definitely change and expire. And I think we can safely think through the things that the different parties dislike. And so the things that the Republicans dislike, energy credits and that kind of stuff, they'll probably try to let that kind of stuff expire and maybe or maybe not get in a big argument about it. So that's kind of, I would say, for most people, like a smaller level thing, right?
Yeah,
The things that I think impact people more are the premium tax credit. So how they handle
yeah,
paying for marketplace health insurance for middle income and lower income people. And that affects retirees. Sometimes people that retire early take advantage of the premium tax credit.
absolutely.
So that affects our audience definitely. And so that I'm interested in what happens because there's a lot of rhetoric on the Republican side, but the it's a hard issue. Like how to pay for health, how to medical insurance is hard. So that takes a lot of work to try to figure that out. Okay, so that's a hard issue. Qualified business income, I think that's an interesting place where they might make some reforms. The child tax credit is something that they banter around a lot. It's really popular because it's and I really like it too, for people who are making under $400,000 a year, which is a lot. Most people
Right.
can get a nice $2,000 credit for each kid. So that's something that they'll, they get a lot of eyeballs on your feed if you're talking about them cutting that, right?
Right.
But it doesn't mean that they're going to do that.
Right.
If anything, I would say they might try to beef it up. The other thing is because of, again, what are Republicans like versus what are Democrats like, capital gains and dividends, how much those are taxed. That's probably going to be a major focal point.
Yeah. Yeah. Yeah, it's interesting. I really appreciate all those. I tend to think in terms of, tax brackets and those things, but all those things you mentioned, they were major components of a lot of people's tax returns, right? And it's interesting as you're describing that, what came to me was some of the other proposals that are out there, or the gossip, as I call it, that you hear. Like, I'm not even really paying them like less than half an ear of attention to that. What's going to happen, child tax credit, QBI, some of these sorts of things, something's going to be changing, right? So I've got maybe a full ear on that, right? Not gonna, get both ears pointed forward, ready to do something, but like, okay, more in tune because those things are on the table. Tax rates are on the table. I hear some folks now saying that since the Republicans now are, basically in charge of Washington, everything's going to stay the same. I'm like, well, maybe it's certainly more likely than it was, 6 months ago. Does that? But I am very much less confident that, and I see people. So absolutely, I've got a bet with the CPA in town here. We're going to have a bet on breakfast that everything's going to stay the same, or there's going to be some changes. I don't know if it's going to be fully expire, but I don't think it's going to be fully extended as far as the current things, right? So there's uncertainty to me anyway, or still nothing to really do, but paying attention to some of those things that you just mentioned, and there's less certainty for me in that. In the past 10 years, I could pretty much tell you what next year's tax law looked like unless Congress does something different. This year, I'm not 100% confident it's going to be the same as it is this year. Not 100% confident it's going away. And so like there's going to be some ambiguity to pay it. So that's, for me, it's paying attention to the ambiguity and being ready to do something when there's something to do, as opposed to trying to be out in front of the stuff, right? There's nothing to be in front of, but that levels maybe of paying attention. One is just white noise. One is gray noise. Like, no, there's something going on with some of the things you're talking about. There's going to be some action in some fashion. And then hopefully sometime before December 23rd, we'll have some information we can do something with, as opposed to having, 4 days before the end of the year to actually do stuff. So that's the other thing, is just, being aware and being ready to do something when the time is right. So.
That seems like a great place to wrap it up, John. I'm Bridget Sullivan Remote. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. Both Bridget and I are taking on new clients, so we'd love to hear from you. But if you'd like an advisor that's local to your area and you like what we talk about on our show, both Bridget and I are members of the Alliance of Comprehensive Planners, group of tax-focused, fee-only planners who think in a similar fashion to us. So if you're interested in somebody by you, check out acplanners.org.
And please subscribe.